So as the stock market's gotten a little shaky lately, there's one asset that has really shined, and that is gold. So should you be thinking about adding gold to your portfolio right now? So look, the truth is I am not a big fan of gold. There's some general kind of long-term reasons why I don't use gold in portfolios, but there's also some short-term tactical reasons why I'm cautious on gold right now. Let's start with the long-term reasons, and then I'll get into some of my concerns about the current market today. So look, I've always believed over my 25 plus years in investing that the best way to be successful in markets is to find the easiest bets you can make and make those bets over and over again. So one example of this philosophy is that I like to focus my portfolio on assets that have a core fundamental reason why they should generally rise over time. So for example, stocks should generally rise over time because company profits generally increase over time as long as the economy is broadly growing. And so if I'm going to buy stocks over the long horizons, I really just got to bet that the economy generally grows. And that, to me, that's a pretty easy to bet to make. It's a bet I want to make over and over again. Gold doesn't have anything like that going for it. It doesn't produce any cash flow. It doesn't have any meaningful industrial use. The value of gold is all about flows. So the price goes up if more people are buying it. The price goes down if more people are selling it. So in other words, gold is really driven by speculation more than anything else. And what that means is that in order to make money on gold, you have to time your entry and your exit just right. And to me, that makes gold a much harder bet than other assets like stocks or bonds. Let me put some numbers behind this. So over the last 50 years, stocks, and here I'm going to use the S&P 500 as my stand-in for stocks, they produced a positive return in 82% of calendar years. Gold has only done the same in 56% of years. So, out of 10 years, stocks are up. Only about half of years is gold up. Gold also suffers more deep downturns than stocks do. So again, using the last 50 years, we'll define a bear market as any period where the price of it drops at least 20% from its recent highs. So by that measure, gold has been in a bear market 44% of days over that period, whereas the same thing for stocks is only 14%. Now, gold doesn't make up for this downside volatility with commensurate upside. So if you'd invested $10,000 in gold 50 years ago, that'd be worth something like $180,000 today, which is nice. But that same investment in stocks would be worth over $3 million today. So to me, this just emphasizes that gold is basically a trading asset. It suffers through more downturns than stocks do, especially severe downturns, and overall just tends to drag down your portfolio return. For me, that's a no thanks. I know what you're thinking. That was the history, right? That was then. What about right now? So gold has surged so far this year due in part because of the economic uncertainty wrought by President Trump's tariff plan. So could that momentum continue for gold? Now, there's kind of two arguments here that I see. One is that gold is thought of as an inflation hedge, and that, tariffs probably are going to cause inflation to rise. Maybe that's going to be good for gold. The problem here is that the idea that gold's an inflation hedge just isn't backed up by the data. So if we consider a period where inflation is 3% or higher, a high inflation period, and inflation, below that is a low inflation period, gold's actually done better in low inflation periods. So in high inflation periods, by that definition, gold has an average return of 4% per year. In low inflation periods, gold has a return of 7% per year. So again, this idea that gold is an inflation hedge just hasn't panned out historically. Now, the other argument you hear is that gold is a hedge against the decline in the dollar. Now, that idea actually is backed up by the data. One sort of crude way you can think of gold prices is that the value of the gold doesn't change. It's the value of the currency that changes. And so, if the dollar gets weaker, by proxy, that means the gold priced in dollars goes up. So as we're recording this on April 18th, the dollar has declined about 10% versus both the euro and the yen. And it's declined against a number of other major currencies. So could it keep declining? Well, I don't know for sure that it will, but it definitely could. But I would point out that if you already own a globally diversified portfolio of stocks, you already have money in other currencies. So the equity portfolio, the main equity portfolio we use here at Facet, has a target of 30% of the portfolio in non-US assets. So in other words, 30% of your money in that portfolio is not in the dollar. It's in some other currency. So to me, that's plenty of protection against a decline in the dollar. Now, lastly, I said earlier that at its core, betting on gold is a bet on flows, right? So the question becomes will money flow into or out of gold? So over the last few years, there have been really large flows from individual investors in India and China, and that's helped power gold higher in 2023 and 2024, even though the dollar was actually stronger in those years. So right now, in my view, a bet on gold isn't just a bet on the dollar continuing to climb. It's also a bet on the investing habits of Chinese and Indian investors. And to me, this makes the bet on gold even more speculative than it usually is. So not only do you have to guess right on the direction of the dollar, you also have to bet on flows from individual investors, which are notoriously flighty in any country. So look, as I'm looking at gold, I just don't see the appeal. The data on long-term results is frankly bad, but then and the near-term opportunity to me, it's pretty questionable. I'm comfortable getting my non-dollar exposure from my global stocks. I don't feel the need to add gold into the mix. But hey, what do you think? I know there's a lot of big fans of gold out there. I'd love to hear your thoughts. Put a comment in the comments section. I'm happy to respond to anything I see there personally. And if you like this content, we're going to be coming at you about once a week with thoughts on what's going on out of the White House, out of the Fed, with the economy and markets. So hit that subscribe button. You'll be the first to know when a new video hits. I'd love to see you again.